We just heard one of your clients saying she can't get it worked out. What's her problem? Is she just not doing the right things?
Her problem is that she pays her bills. And she has a wonderful credit score, and she has a loan that is very profitable for the bank.
So, but she's told them she's going to be problem. I mean, why won't they return? Why won't they work it out with her?
Currently, the banks look at things either as a positive or a negative. Her loan is currently performing, which means they're making a high level of profit on it. They look at her credit score, they look at her history of payment, and they see that she is probably a person that is going to continue to make her payments no matter how far upside down she gets, because that's her history.
So they're making a cold calculation that they can bleed her.
They're going to bleed her as far as they can, and then they're going to write the loan off as bad debt if and when it goes bad.
You're in the business. Is this just one lender, one experience?
It's pretty much widespread. Most of the lenders are looking to either bleed the client as long as they can until that loan does eventually go into arrears, and they have the back-end security of knowing that once they write it off as bad debt, their shareholders will see it as a short-term loss, and it's all about their profit line.
I've heard this with Wachovia. I've heard this with Countrywide. I've heard this with GMAC. I mean, a year ago, I interviewed the president of the Mortgage Bankers Association. He looked me in the eye and said, just call us. We're going to work it out. Did it happen?
I think there's a lot of good people in the business that are doing everything they can to make it happen. But unfortunately, my bank, myself, anybody that works at my bank, we're not the end investor. The end investors are on Wall Street. They're usually not even affiliated with the bank that's writing the loan or servicing the loan. They're usually large insurance companies, foreign investors. They're making the calls based on what fits their shareholder interests. And it's not about the consumer. It's not about the mortgage broker. You hear them blaming everything on the brokers. We didn't come up with these loans. We sold what they told us to sell, and now we're trying to help people renegotiate it, and it's all about the investor.
Where are the Wachovias? Where are the Countrywides? Where are the GMACs? Why aren't they working with people?
You'd have to ask them. Being in this industry, I don't want to say things that I don't have proof to back up. Our history is that none of the major lenders are willing to negotiate on any loan that is not currently in jeopardy of going up completely upside down. So you either need to be 10 days away from foreclosure in order to have the bank even consider it, or they just don't want to talk to you.
So everything we've heard in the last year of call us if you think you're going to be behind, is that just it's rhetoric? What is it?
It sounds great for public relations, but it really doesn't mean a whole lot.
So what are the thousands and thousands of people in San Diego who are upside down, who actually are paying their bills, or are set for another reset? What are they supposed to do? I mean, doesn't that put them in a situation of bankruptcy, foreclosure, or just telling the banks to stick it?
There's a reason why you can drive through neighborhoods in San Diego that used to be filled with middle and upper middle class, hardworking people that are vacant. I mean, there's whole neighborhoods that are going out right now because the banks are so concerned with keeping whatever loans that are profitable as long as they possibly can that they're not thinking long term. Everything is short term. What is my profit margin going to look like this quarter, next quarter, this year? When if they just used a measure of common sense and thought about maybe I cut my profit margin a little bit to help this client keep the loan, then we could make profit over the 30-year life of the loan. Instead, they're thinking about what is my shareholder return going to be this quarter.
What happened? I saw the press conference with the president and the head of the Federal Reserve 3 months ago. They said people were going to get to work their loans out.
The problem with that is that that's a bunch of government figureheads that are in the trenches every day. And even though they put together some great schemes, painted the broad strokes for some programs to actually help people, when it comes down to the actual implementation of it, it still relies on the banks that are underwriting the loans and providing the money being willing to provide the money. And they put so many conditions and stipulations on all of these programs that unless you fit into a very narrow pigeonhole, you don't qualify for any of these great programs that the government says you qualify for.
You're in the business. You've seen it. You've been in real estate and banking how long?
This will be my 7th year. And before that, I was an attorney in the real estate field.
What do you make of, it's got to frustrate you. I asked a homeowner if she was angry. She's disappointed, not angry.
The single most frustrating part about it is that everything you hear in the newspapers and everything you hear on TV is that this whole crisis was perpetrated by mortgage brokers. Well, I used to be a mortgage broker before I became part of a bank, and we didn't sell a lot of these bad loans. A lot of these bad loans were sold directly by the big companies. And I'm not going to name names, but we didn't come up with option arm loans. We didn't put 3-year prepays on 2-year interest-only loans. We're just left to hold the bag. And for those of us that are actively trying to help our clients, and a lot of these clients have been our clients for years. These are repeat clients that come back to us for our counseling and advice. And when they come back to us, and we have to tell them, there's nothing that we can do for you. We're sorry. Your only option is either to keep making a payment that's increasing every 6 months or walk away from your house. Then we get into a lot more than just being a financial advisor. We get into kind of being a life coach. And that's not always a fun position to be in, is to tell somebody that after 20 years of working hard, they're either going to lose their entire retirement in order to save their house, or they're going to lose their house and end up renting again. And that's really where the situation is leading. No matter how hard I or any one of the thousands of other mortgage brokers, small banks, no matter how hard we try, we're just not getting the cooperation from the big power players in the industry.
Sad comment?
It's a pretty sad state of affairs, to be quite honest with you. And it's going to snowball into other areas because there's folks like myself and the loan officers that work for me. We have mortgages too. And if we can't make an honest living helping out clients doing honest loans, then we're going to end up losing our houses too because, it's very tough for us to get even loans for people that qualify done today because of all the underwriting guidelines and restrictions and red tape that is being put out there by people in offices that never actually sit down and talk to clients and figure out how to get things done.
When's it going to turn around?
It's going to turn around probably when the entire thing implodes, or when house values go back up and the people that are currently upside down or at high loan-to-value ratios all of a sudden are now in a position where they're at 75 or 80% of the value of their houses. But short-term, nothing's going to improve.